Hello and welcome back to goldstocktrades.com. Today we have a new and special guest with us, Ross Phillips. Ross is Chief Operating Officer and Chief Financial Officer of Potash Ridge, which can be traded as PRK on the Toronto Stock Exchange and as POTRF on the OTC. Thanks, Ross, for being here with us today.
Thank you very much for having me.
Ross, Potash Ridge is a near-term producer of potassium sulfate, SOP, potash. Could you talk to us, and for people who are not being introduced to the potash sector, what is the difference between potassium sulfate and potassium chloride, and what the unique attributes of potassium sulfite is?
Well, fundamentally, potash refers to potassium-bearing minerals. The most common form is potassium chloride, called muriate of potash, or MOP. It's got a worldwide market of about 50 million tons a year, and it's produced largely out of Saskatchewan, Russia, Uralkali, parts of Europe, and parts of the United States. Very large market. However, it's a market that's overserved. Its price dropped from about $400, $500 a ton about 4 years ago to about $180 a ton right now. And MOP is largely great for row crops. It's great for corn, it's great for wheat, and the like. SOP, potassium sulfate, has a very big key difference from MOP. It's potassium sulfate, and it's meant for high-end crops, fruits, nuts, and vegetables. The challenge is sulfur is a nutrient. So you've got two nutrients, potassium and sulfur. Great for almonds, for instance. Potassium chloride, MOP, isn't really great for these high-end crops, fruits, nuts, and vegetables, because the chloride actually hurts the fruit. So you end up with a premium demand for SOP and a pricing of about $700 a ton versus the $180 a ton for MOP as a result. The other key difference is SOP is an underserved market. Independent estimates are that the worldwide demand is about 10 million tons a year for SOP, but there's only 5 million tons a year of supply because conventional forms of production are severely limited in their ability to expand to meet demand. So this creates a great opportunity of a premium commodity and an undersupplied market.
Can we talk a little bit about the North American supply and demand?
Sure. So of that 5 million tons a year in trade, only 300,000 to 400,000 tons a year are done as traded in North America. There's only one producer, it's Compass Minerals out of the Great Salt Lake, and they produce about 340,000 tons a year of SOP, sell it primarily into California. And they are the only producer in North America. There might be a little bit of imports coming in, but not a lot. Our view is that there's at least 1 million tons of demand in North America that's not being met. Citrus crops in Florida, fruits, nuts, and vegetables in California, and even other crops such as tobacco in the eastern part of the United States. So if a supplier such as ourselves could enter the market, we could meet this unmet demand without really impacting the price too much.
Ross, introduce us to the projects, the potassium sulfate SOP projects that Potash Ridge has right now.
So Potash Ridge has two very distinct projects to bring SOP into the North American market. One is the Valleyfield project in Quebec. It's a near-term production opportunity that would cost about $50 million in capex Canadian, and would bring about 40,000 tons a year of SOP into the market by the end of 2017. We're using a technology that's used in China and used in Europe, but it's not used in North America for some reasons I'll get into in a minute. But it allows us to be the first user of this Mannheim technology in North America, taking advantage of the location specific in Quebec. The second project is the Blonde Mountain project. This is a world-class opportunity in Utah, which will allow us to produce, once at full production, 600,000 tons a year of SOP and be the lowest cost producer of SOP in the world based on our 2013 pre-feasibility study. What we want to do is to bring that project into production initially at about a third of the original scale that we contemplated, and then as time and the market develops, bring the remainder into production so that we have a wonderful low-cost facility close to California serving that market.
So, talk to us about the goal over the next year with this Valleyfield project. I know that you just retained SNC. What are you working on right now? What are some of the goals over the next 6 months to a year?
So we engaged SNC from the start of this project, going back to late 2015, and they produced an engineering study estimating the capex to be about $50 million, and from that we see the returns here of about over 30% and a $17 million Canadian EBITDA. We've moved forward with SNC. We're working with them to go towards a fixed price contract to develop Valleyfield. And we have a very distinct plan on how to develop this project. First, we engaged a world-class engineering firm in SNC-Lavalin. Next, we're moving forward with the permitting, which should only take 3 months. And then we're looking at the financing and the offtake arrangements to Valleyfield and bring those in conjunction with each other so that we can do non-dilutive financing to our shareholders through preferred shares at the project level that will allow us to execute the project while maintaining as much of the value of the project as possible at the current shareholder level. In addition, we're looking at Valleyfield as a potential second phase that could bring another phase of the same size into production by the end of 2018. So it's a very nice near-term, modest capex opportunity that still is going to be producing it below Compass Minerals' cost of production.
Talk to us about the Blonde Mountain project and the upside potential there over the longer term. As this market really needs to have a large supply of SOP to come online.
So the Blonde Mountain project is what this company was formed to develop in 2011. And we raised money in the Canadian Stock Exchange through an IPO and through private placements. And we invested $40 million into it to go with the historical money of about $100 million in today's dollars to advance this project to where it is today. We got it to a pre-feasibility level. We had 40 years of reserves, and it's fully permitted for all intents and purposes. But the challenge we faced in 2014 with this wonderful project of a 20% return, it's $1 billion US capex, but at $1 billion NPV, $300 million a year in cash flow, is it was challenging to finance a project of that size at that time, as well as, it's better to phase that level of production over time. So again, we've engaged SNC-Lavalin to look at it with us to say, is it possible to bring it in as a third of the production at about 200,000 tons to begin with, and then phase the rest in, because this is going to be a world-class facility. This is going to be a project that will be the lowest cost producer of SOP in the world, close to one of the largest sources of unmet demand for SOP in the world in California. In addition, there's actually other upside with Blonde Mountain in that there's actually alumina in our tailings that we could bring into market and further provide an upside for the opportunity.
Let's talk about some of the unique characteristics of this company. There's very few development stage companies that have this sort of commodity that has had such a strong performance over the past 5 years. Could you highlight what makes Potash Ridge so unique?
First, I think the management team here is unique. Guy Bentic, our CEO, and myself, we work on large projects, we bring them into production, and we work from the onset on what is the best way to get this into production, to get it generating cash and get shareholder value. And we've looked at it from the start, we've advanced this project readily, and we believe that we can do a unique financing structure on both projects that keeps preferred shares or a similar arrangement at the project level and not dilute our shareholders. Second, SOP is an underserved commodity, and there's very limited opportunities in North America for new production. The reason that we're able to use this technology in Valleyfield is we have an individual with us that has 9 years experience using the Mannheim technology in China and is bringing it into North America. We will be the first. And there's some very specific, unique attributes to bringing this technology in that we have found in Valleyfield with local infrastructure, local demand for the key byproduct that I don't think others have been able to craft in North America. And third, Blonde is just a world-class facility with the opportunity to be the low-cost attribute. There is only one other potential producer of SOP in North America outside of Compass, and they're 5 to 6 years away from production. So we're uniquely positioned to meet this unmet demand in North America with a management team that's focused on execution.
Can you just highlight the management team that's in place and the amount of experience that the management team has to take this to the next stage?
So Guy Bentic is our CEO and president. He historically had worked as the CFO of Shared International, a Canadian multinational mining company, and then as SVP Capital Projects, looking over a suite of capital projects, their management, bringing them in production, and aligning the technical challenges. During his time there, he actually did the largest mining finance deal in history up to that date for the Mbatabi project in Madagascar, and gained international experience in finance as well as in project management. I worked with Guy. I was with Sharon on the coal side in Alberta, working on large projects, focusing on aligning the commercial, regulatory, and technical aspects of the projects, and keeping people focused on where do we drive value, what really needs to get done here. I think what a lot of junior mining companies miss is they're run by geologists or ex-investment bankers. They don't have project and finance people with the depth of experience that we have. We are well complemented by Jay Hussey, and Mr. Hussey spent 9 years with Magao Corporation, the largest user of this Mannheim technology in China. He founded the Valleyfield project. Magao, for cultural reasons, chose not to advance it. He brought it forward with himself, and he's really brought a lot of SOP experience as well as a lot of experience with this technology into our company that will allow us to develop Valleyfield effectively and without a lot of challenges. So collectively, we have this great experience. We've got a technical consultant, Ripton Ramsing, who works with us, as well as we have a very large suite of technical advisors that we use. One of the nice parts about the current mining market is the technical expertise is out there. You can gain it, you can have it complement your staff without bringing on overhead. I think that's really a neat opportunity as well.
Ross Phillips, CFO, COO, Potash Ridge, which can be traded as PRK on the Toronto and as POTRF on the OTC. Thanks so much for being here with us today.
Thank you very much for the opportunity.